Okay, let's dive in. Today, July 30th, 2025, it feels like a really critical day for U.S. markets.
It really does. A convergence, right?
Yeah, we're calling it a triple threat almost. You've got three big things hitting at once. The first look at Q2 GDP,
Uh-huh.
the Fed's policy decision coming out, and then just a flood of really important corporate earnings. Think Microsoft, Meta,
Mm.
the heavy hitters.
And what's interesting, is looking at the pre-market, it's cautiously optimistic, maybe, but definitely tense.
Tense is a good word.
Yeah, like the market wants that strong GDP number, but it's also kind of hoping the Fed sounds, well, dovish, reassuring.
Right. So our job today really is to try and cut through that noise, look at these forces, and figure out what it might mean for you.
Exactly. Let's break it down.
So let's start with that first piece, the macro picture, this sort of strength versus strain idea. We're waiting on that Q2 GDP number.
Yeah, the advance estimate.
Right. Consensus is looking for what, around 2.4% growth, which, I mean, that looks like a solid bounce back from Q1.
It does, statistically. Q1 had that weird 0.5% contraction, but that was all tangled up with import surges and things. So Q2 should look better on paper.
But
Uh,
there's always a but, isn't there?
Well, yeah, if you look ahead, forecasts like the Philly Fed survey, they're actually pointing to a slowdown. Like Q3 growth may be slumping to just 0.9%.
Wow. Okay.
So the question is, does the market celebrate a good Q2 number, or does it look past that to the, potentially weaker trend coming? It's a bit of a puzzle.
And the labor market feeds into this too, right? That ADP report for July.
Crucial, especially after June's number was, frankly, a shocker. A loss of 33,000 private sector jobs.
Yeah, I remember that. Completely different from the official BLS numbers.
Exactly, because the BLS figures were really boosted by government hiring. So the ADP report might give us a cleaner look at private sector health, which, well, it looked a bit fragile in June. Forecast is for a small gain this time, maybe 77, 78K. We'll see.
Okay, so you've got this potentially strong GDP number looking back, but maybe some cracks appearing in the labor market looking forward. That sets up the Fed's job today, doesn't it? Our second threat.
Absolutely. I mean, nobody really expects them to change rates today. A hold is pretty much baked in.
Right, so it's all about the messaging.
It's all about the statement and what Chair Powell says in the press conference. How do they acknowledge that potentially strong Q2 growth, but also address the inflation that's still sticky and these signs the labor market might be cooling off?
It's a real communication challenge. They need to manage expectations, especially around a potential rate cut, maybe as soon as September.
That's what the market's hoping for, or at least looking for signals about. It's a very delicate balance.
Okay, so moving from the big picture to individual companies. The third test today is earnings. And it feels like this quarter is a big, big check-in on the whole AI story.
Oh, massively. Later today, we get Microsoft and Meta. Huge.
For Microsoft, everyone's watching Azure cloud growth, obviously, but also how much AI services are adding, and critically, their spending plans, the CapEx for AI chips.
Yep. And Meta, similar story in some ways. Ad revenue, how much they're pouring into Reality Labs, but also that AI-related spending. It's a referendum, like you said.
But we've already seen some pretty rough results from others, haven't we?
We have. I mean, look at Intel. A nearly $3 billion loss in Q2, big restructuring, cutting 15% of their workforce. That's major.
Wow.
And then Novo Nordisk, the pharma giant, plunging 22% because they had to slash the sales forecast for their Wegovy drug. Whirlpool, too, missed earnings, cut guidance, shares took a nosedive.
So it's not just tech. It highlights how tough it is out there if you miss expectations.
Exactly. The market is just not forgiving right now. If you don't execute or if you misjudge demand, it's brutal.
But there are bright spots. It's not all bad news.
No, definitely not. Look at SoFi Technologies. They beat estimates and raised their full-year guidance. Stock popped 8%.
And Corning too, right? Up 5%.
Yeah, good results and better than expected guidance for Q3. That's the key theme. Companies that deliver and provide confident outlooks are getting rewarded.
It seems like forward guidance is almost everything right now.
It really is. The market desperately wants clarity about the future.
And what about other movers? Anything else catching your eye?
Well, a couple of things. Tesla striking that big $4.3 billion battery deal with LG for energy storage. That's interesting strategically, diversifying supply. We saw some meme stock craziness with Opendoor. Surged like crazy, but now facing listing issues. A bit of a sideshow, maybe, but shows speculation is still around.
Always lurking.
And then you have big M&A like Union Pacific trying to buy Norfolk Southern for $85 billion. That signals some corporate confidence, despite everything.
So pulling it all together, what does this mean for potential opportunities? Where might things be heading?
Well, like we just said, that momentum is clearly with companies raising guidance.
Yeah.
SoFi, Corning are great examples. That's where the market's focus is.
Execution and outlook.
Precisely. Also, maybe keep an eye on some value plays, contrarian ideas. Vista Energy, for instance. Fundamentals seem to be improving, getting some analyst upgrades. Sometimes opportunities pop up where people aren't looking.
So it sounds like today isn't necessarily about the whole market moving one way. It's more about divergence.
I think that's exactly right. A great divergence. You can really see the split between some struggling older companies and those riding the AI wave or just executing better. It's quite stark.
And how today plays out, the GDP, the Fed's words, these huge earnings reports.
Yeah.
That's really going to set the tone for the rest of the summer, won't it?
Absolutely. It feels like today resolves some key uncertainties, or at least gives us strong direction for investors, staying agile, focusing on those companies, showing clear results and confident guidance. That seems to be what the market wants to pay for in this kind of environment. It's complex, it's uncertain, but that's where the rewards seem to be.
Right. So something for all of you listening to think about. How exactly is the Fed going to square that circle? Reconcile potentially strong GDP data looking backwards with maybe weaker private sector signals emerging now. What does that balancing act actually mean for their next move? Lots to watch.